Good morning this Wednesday, the 23rd of August. I'm Grady Wolfe, market analyst at Bell Direct. Wall Street closed mixed on Tuesday amid investor concerns over rising bond yields, sentiment wavering ahead of a key speech later this week from Fed Chair Jerome Powell, and on key banking downgrades out of S&P Global. Several regional banks, including KeyCorp and Comerica, fell 4% on Tuesday after S&P Global cut credit ratings on several banks, citing tough operating conditions as a reason for the downgrade. The S&P 500 fell 0.3% on Tuesday, while the Dow Jones lost 0.5%, and the tech-heavy Nasdaq posted a small gain at the closing bell. Rising bond yields are placing pressure and adding further downside to US equities, with cash and short-dated bonds yielding 5% plus, thus attracting investors to returns received from bonds over equities at these current levels. Department store giant Macy's fell 13% on Tuesday after the company reiterated its conservative full-year guidance, as it expects comparable sales to fall 6 to 7.5%. The sell-off in shares comes despite Macy's beating Wall Street's quarterly expectations. And in Europe, markets closed higher across the region on Tuesday as a rise in technology stocks boosted gains across the board. French game maker Ubisoft Entertainment rose 9% after Microsoft said it would divest several gaming rights to the company as part of a new deal submitted to UK regulators for its takeover of Activision Blizzard, according to CNBC. Investors are also monitoring European natural gas prices, which saw a sharp rise earlier this week amid threats of a strike action in Australia, which could disrupt 10% of the world's LNG flows. The Stoxx 600 rose 0.7% on Tuesday, while Germany's DAX added 0.66%, and the French CAC rose 0.59%, and in the UK, the FTSE 100 lifted 0.18%. The local market rose just 0.09% on Tuesday, following a 0.5% loss on Monday as the market-driven volatility by global market moves around the world and macro news out of China continues to impact investor sentiment. China's sluggish recovery continues to go from bad to worse, with weak retail sales and manufacturing output data providing further indication that the world's second-largest economy is really struggling to regain momentum post-pandemic. With no material stimulus to support recovery coming out of the Chinese government yet, aside from some slight interest rate cuts and hub support, the economy is looking to continue its deflation journey over the coming months. Heavy losses among consumer staples and information technology stocks on Tuesday were offset by strength in the consumer discretionary and energy sectors. Iress tanked 36% on Tuesday, while Premier Investments and Breville led the gains, adding 12% and 9% respectively. We are also in the heart of reporting season, with this week being arguably the biggest week in the August calendar so far. So far, 107 companies have reported, with 35 beating expectations, 42 meeting expectations, and 30 missing expectations. 17 companies have been upgraded by brokers, while 10 have been downgraded. We are still being blown away by some retailers maintaining profits in FY23 against all odds and expectations, with Breville Group the latest name to stun investors with FY23 results and the share price soaring 15% as a result. After the company reported revenue rose 4.2%, NPAT lifted 4.2%, and the company lifted its full-year dividend. Coles Group reported yesterday with a more disappointing outcome that caused investors to sell out. The supermarket giant reported group sales revenue rose 5.9%, EBITDA rose 3.8%, NPAT fell 0.3%, and the final dividend remained flat at 30 cents per share, taking the year's total to 66 cents per share. Financing costs for continuing operations also increased by 9.4% to $394 million amid higher borrowing costs in the rising interest rate environment. On the commodities front this morning, oil is trading 0.38% lower at $79.80 a barrel. Gold is up 0.18% at $1,897 an ounce, and iron ore is up almost 0.5% at $109 a tonne. One Aussie dollar is buying 64 US cents, 93.68 Japanese yen, 50.04 British pence, and one New Zealand dollar and 8 cents. Ahead of the local trading session here in Australia, the SPI futures are expecting the ASX to open the midweek session down 0.24%. And now let's dive into some trading ideas for your consideration today. Bell Potter has increased the price target on Mader Group from $6.10 to $6.90 and maintain a hold rating on the leading provider of specialised contract labour for maintenance of heavy mobile equipment in the resources and civil industries, following the release of the company's FY23 results, including revenue up 51% year-on-year to $608.8 million, EBITDA up 57% to $75.1 million, and underlying NPAT up 48% year-on-year to $38.5 million. Mader Group also expects FY24 revenue of at least $770 million and NPAT of at least $50 million, implying material growth in the new financial year. And Trading Central has identified a bullish signal on Telecom following the formation of a pattern over a period of 45 days, which is roughly the same amount of time the share price may rise from the close of 48 cents per share to the range of 55 to 57 cents, according to standard principles of technical analysis. And that's all we have time for this morning. Have a wonderful Wednesday, and as always, happy investing.